This year, Bitcoin has once again taken the spotlight. Just a year ago, it was trading below $20,000. Many thought the crypto winter would last forever. But fast forward to today, and Bitcoin is pushing past record highs, shocking both skeptics and seasoned investors alike. So what changed? Why is Bitcoin, once considered magic internet money, now seen by Wall Street as a legitimate store of value? The answer lies in a combination of regulation, institutional adoption, economic uncertainty, and a growing public shift away from traditional finance. In this video, we'll break down how Bitcoin went from cheap to expensive in 2025, and what it means for the future of money here in the United States. Let's rewind a bit. Bitcoin was created in 2009 during the fallout of the financial crisis, a direct response to the collapse of big banks and bailouts. Back then, it was practically worthless. In 2010, someone famously spent 10,000 BTC on 2 pizzas. That same Bitcoin today would be worth hundreds of millions. Over the years, Bitcoin has had its ups and downs, booming in 2017, crashing in 2018, and then hitting all-time highs during the pandemic. But nothing quite compares to what we've seen in 2025. So what's driving this recent price explosion? First, let's talk regulation. For years, U.S. investors were unsure if Bitcoin was legal, risky, or somewhere in between. But earlier this year, the SEC finally approved multiple Bitcoin ETFs. This was a game changer. Now institutions like BlackRock and Fidelity are offering Bitcoin exposure to millions of Americans through regulated financial products. That stamp of approval gave Bitcoin a whole new level of legitimacy in the eyes of traditional investors. Second, let's talk about the economy. Inflation in the U.S. hasn't gone away, it's just shifted. As prices remain high and the dollar weakens in purchasing power, more Americans are looking for inflation hedges. Gold? Still around, but millennials and Gen Z, they're leaning toward Bitcoin. It's borderless, censorship-resistant, and unlike the U.S. dollar, it has a hard cap. Only 21 million will ever exist. And finally, there's culture. Whether it's on TikTok, X, formerly Twitter, or YouTube, Bitcoin isn't just money, it's a movement, a response to debt, inflation, and a feeling that the system is rigged. People aren't just buying Bitcoin, they're opting out. But let's be real, this isn't a fairy tale. Bitcoin is still volatile. Prices swing wildly, there are regulatory risks, security concerns, and no government guarantees. If you're investing in Bitcoin, you need to understand what you're getting into. This isn't about day trading, it's about long-term conviction and understanding what Bitcoin stands for. So where does that leave us? Bitcoin has gone from being a nerdy internet experiment to one of the most talked about financial assets in America. From pizza to portfolios, it's now part of political debates, corporate strategies, and dinner table conversations. And as more Americans begin to question the future of the dollar, Bitcoin is presenting itself as a real alternative. The real question isn't, will Bitcoin go higher? It's, are you ready if it does?